Good afternoon, everybody, and welcome to the session. Shane, our speaker, is on time. He's in the room. We are ready for an on-time start at 1:35 Eastern. So just sit tight for a couple of minutes, and we will get started momentarily. And thank you very much for joining the session. We'll be back with you shortly. Good afternoon, everybody. There's some more people joining the session. Our speaker, Shane, is in the room. We are ready for an on-time start at 1:35 p.m. Eastern Time, which is about a minute or 90 seconds or so. We're just waiting for other attendees to join us. So just sit tight, and we will get started momentarily. Thanks again for joining the session with us. Good afternoon, everybody, and thank you very much for joining the session. My name is Joe. I'll be your host. A couple of bits of housekeeping. We'll get right into Shane's presentation. Number one, we want to thank everybody for joining these virtual sessions, and of course, the live shows during the year. Keep your feedback coming. It makes us better and better as we move forward. Secondly, time permitting, Shane will answer some questions live. So if this is the first time you're watching us, there is a little message box to the right side of the player you're watching Shane in. Please feel free to send over any questions during the session. And again, time permitting, we will get to as many as we can once he's finished with the presentation. So with that said, it is my great pleasure to introduce everybody to the founder and CEO of Crown Exploration, Shane Schonefeld. He has been an integral part of its 27-year-old oil and gas history. Shane's family was in the well servicing business. Then he attended Texas Tech University. He received his Series 22 and 63 licenses from FINRA. His industry-specific financial knowledge bridges the gap between Crown's numerous well sites and its investors. Shane, it's great to have you back, sir. The floor is now yours.
Thank you, Joe, and welcome everybody. We're going to walk through a little bit of an oil and gas investment, talk a little bit about tax benefits. Hopefully, at the end, too, we can answer some questions you guys may have. Without any further ado, we'll get started on this. And again, my name's Shane Schonefeld. I'm the CEO, one of the founders of Crown. Why investors choose Crown Exploration? Well, I think one of the biggest reasons they choose us is experience. We've been around for 28 years. It'll be 29 in January. We've drilled over 230 wells across 5 states. We focus on proven fields. We utilize modern, efficient drilling technologies. We align with our investors. We do accredited investors, U.S. citizens, to reduce tax burdens, and we provide potential for long-term monthly income. We have a strong partnership with geologists, landmen, regulatory experts, and we also operate with an exclusive FINRA licensed broker-dealer. So I'm Crown, and we have an exclusive arrangement with Texas Security that sells Crown exclusive drilling programs. Here's a little bit about Texas Securities. They were formed in 2003, 22 years of selling exclusively for Crown. So they don't sell for anyone else, just for Crown. registered with the SEC, the members of FINRA, SIPC. All of the representatives offering oil and gas interest are registered, either Series 7, 63, 22, a combination of those. They have annual regulatory examinations, including Regulation Best Interest, Regulation BI. They have an in-house compliance team. They also, along with Crown, we give well status updates and production reports, any necessary information those guys may need when talking to you. Talk a little bit about our due diligence process. It starts off by really identifying fields. We target sustainable infrastructure. And to break that down a little bit, we like areas that have infrastructure, whether it's oil and gas pipeline, gathering facilities, heck, even, easy access in and out, roads would help. And we start by identifying some of those fields. We start then to analyze historical production data. We typically, at least for the past 20 plus years, we drill in developmental areas. We don't really go out and wildcat. We're not looking for new field discoveries. So it's important when we go into an area to understand the historical production data that we can acquire. Once we're satisfied with some of that, and of course, there's many processes in that, and we can get into a little bit of that in a minute. We start acquiring leases and permits. We secure drilling rights, make sure we're in compliance with all the state, local regulations, etc. And then we organize and manage each project. We also like to experience with, we also like to partner with operators, experienced operators. We like that. We like our operators to have skin in the game, not just operating our well, not just billing us. We like operators that have, an ownership stake in everything we drill. I think value comes with that, and experience has kind of taught us that as well. Our due diligence, simply put, we look at any and all surrounding wells, all the production history, anything we can garner, as well as any well logs, formation data, seismic, anything that we can do goes into the due diligence pile. A typical oil and gas investment pipeline looks something like this. Obviously, this isn't every single step, but it shows you quite a few from the very top here to get a pointer down here, maybe. There. Well, acting up on me, folks. Sorry about that. Well, up at the top, review maps and industry exploration, all the way down to, pay investors. Oil and gas is not for everybody, but if you're an accredited investor, high net worth, high income, have some tax burden, it's a great way to offset some of that and to provide potential monthly income. There's a lot of steps there, but don't worry, our partners don't have to do all these steps. We manage all of this, from start to finish. One of our big roles in the company has been horizontal drilling. And a lot of people kind of can get their head around what is horizontal drilling versus what is vertical drilling. But what I'm trying to show you here in this schematic, obviously it's not the scale, it's just an example for illustrative purposes. But on the left-hand side here, there we go, I got my mouse. On the left-hand side here, we have a horizontal well, and on the right, a vertical well, and on the right, we have a horizontal well. If all being the same from surface down, surface down to 6,000 feet, and at the bottom here is your pay zone. We'll just call that pay zone 100 feet in thickness. And if you drill vertically, down, you drill through it, you cut through 100 feet of pay zone. So you've exposed 100 feet of pay. And over here on the right, you drill down 6,000 feet, and then you start to make your curve, as we call it, to go horizontal. And the exposure is much greater. In this example, it's 9,000 feet, which gives you a total measured depth on this illustration of 15,000 feet. That's the biggest difference between horizontal and vertical, is simply the pay zone exposure. Now, horizontal doesn't work for every single oil well out there. every single gas well. It is primarily used in blanket formations. When I mentioned earlier that we don't like to step out and look for new fields or drill in unknown areas. Crown primarily drills in known areas, blanket formations. And these, when I say blanket formations, these can be square miles or even more in size and in distance. And what horizontal has allowed you to do is unlock some of these reservoirs that are really not producible just drilling vertical, simply because of what you're exposing. Anyway, it's always changing. The technologies in drilling is always changing. Horizontal is always changing. 20 some years ago when we started drilling horizontal wells, it would take, roughly 30 to 40 days to drill a well, and we were only drilling 2,500 feet of horizontal leg. Now we're drilling 9,000, 10,000 foot legs, drilling multiple legs off of a single pad. It's really a lot of things have changed in the last, 15, 20 years, and we continue to adapt and continue to use that kind of technology. But again, it's just a cross section, kind of shows the big differences of what we do versus what some of our competitors may do. I'm not against vertical drilling. Vertical drilling is fine for certain aspects, but most of the time, vertical drilling is used in smaller formations, such as a reef. And when I say smaller, I'm not talking a blanket formation. So the chances of hitting those is substantially higher trying to hit a vertical well into your targeted zone. They may not be as thick as you think, maybe thinner than you think. You say, well, you could say that about horizontal as well. You could, but the ability of horizontal is your downhole tools and the technology exists to keep you in that pay zone. So it can literally undulate. You can move it up, down, side to side to stay in the pay zone. And that's probably been one of the biggest advancements in the last, 15, 20 years is horizontal drilling and the use of it in blanket formations. I know most of you are probably joining me today, and I'm no CPA. I do recommend that everyone talk to their CPA to make sure that, any kind of tax incentive, anything like that would be beneficial to you. But typically, our typical client is high net worth, high income, wants to offset some of that taxes. And in 1986, they passed the Reform Act. And basically, what that act says, it specifically exempted oil and gas working interests from being classified as passive income. Active versus passive income. Well, the concept of passive income and active income, it prohibits the offsetting of losses, passive activities against income from active businesses. This act provided that a working interest in oil and gas drilling program is not a passive activity. So it can be offset against business income, salaries, capital gross interest, etc. In addition, one of the main benefits to investing in working interest in oil and gas is the small producer tax exemption. Now, this isn't available to large companies. And when I say large companies, I'm talking like Chevron, Exxon, anyone with runs of more than 50,000 barrels per day. But what this does, this exemption allows 15% of any investor's gross income from an oil and gas well to be tax-free. So 15% of any income you receive off of a working interest drilling program, 15% of that's tax-free. So two things really to take away from this is one, oil and gas can be used to offset against business income, salaries, capital gross income, etc. And your small producers exemption is 15% tax-free of the revenue you receive off of working interest program. You have in oil and gas, and many of you may know this, you have tangibles and you have intangibles. Your tangible drilling cost or your developmental cost benefits, those are allocated generally to equipment, tangible drilling development, and completion costs. These costs can be amortized and depreciated over 5 to 7 years. You elect to do that. Talk to your CPA, attorney, whatever you need to about that. Again, I'm not a CPA, but that's kind of how it works for most out there. Your intangible drilling, or we call them IDCs, is oil and gas. The portion of your investment is considered intangible drilling costs, maybe 100% tax deductible during the year paid. Now, some people get a little confused about this. It's like, okay, well, and I'll give you some examples. If you invested in November in a drilling program, typically, and it varies per program depending on how the costs line up and when it was drilled. But you invested in November and we started drilling it in December or January, about 70 to 85% of that initial investment is 100% tax deductible in the year paid. The only time it gets a little different, and we do get this question a lot, is I've seen a lot of guys out there that'll put, some shallow multi-wells together, maybe 3 or 4 wells, and they may start drilling in November, or December, and they may drill 1 or 2, but they haven't drilled all of them the next following year. You may not be able to deduct all of that up front. So it's something you want to talk to someone about before doing this and find out, hey, where is this? When can the deductions be used? Because there are some rules. Typically, it has to be started drilling before March, I think 15th of the following year. So if we raise money in November, December, and as long as we were drilling before March 15th, it would qualify for the prior year. Generally speaking, there are some exceptions, so it's important, to ask that. But kind of what's that look like? Well, your IDCs, again, are 100% tax deductible in the year occurred. There is a few caveats there, as I mentioned. And your tangible drilling costs, that's the balance of your investment. It's 100% tax deductible over the life of the well, or that 5 to 7 year mark that we talked about. Your depletion allowance or your small producer's exemption, that's 15% of production income is tax-free over the life of the well. And its active income deduction can be taken against business income, salaries, capital gross incomes, interest incomes, etc. But what's that kind of investment look like? Well, our investments are typically in 2 parts. You have a drill and test part, and you have a completion part. We only call for drill and test in the beginning. We don't call for completion until the well is drilled and tested. If we deem it commercially viable, we call for the completion. That's the second half of it. That's typically the balance of your drill and test, and your completion is your 5 to 7 year amortization. In this particular example, and again, this is just an example, just showing some prior offerings that we had and kind of how it broke down. Say your drill and test investment was $215,000. That's 1 unit drill and test only. And you had intangible drilling costs, your IDCs, at 85%. It's $182,750. Your first year tax reduction is $67,618 if you're at the 37% bracket. And your investment net tax reduction, $147,382. Anyhow, that's kind of what it looks like on the drill and test side, and kind of on what your IDCs look like on this particular example. So your IDCs, 85% of the 215, $182,750. If you're at the 37% bracket, that's $67,618. Now let's look at revenue. All right, revenue. A little bit different. I'm showing two charts here. The one up top, that's gas, so $4 per MCF, million cubic feet, and down below $65 per barrel of oil. These are a little off. Oil's a little down right now compared to what I'm showing here, but you get the gist of it. We primarily are drilling natural gas wells right now. I'm pretty bullish on natural gas. Natural gas, with the AI movement, with the power needs, liquefying, you name it. I'm a little more bullish on natural gas. Not that we haven't and we don't drill oil wells, but right now we're kind of focused on natural gas. So for argument's sake, let's just kind of focus on what this gas is. This is per MCF per day. So your how your a lot of people ask, well, how's my revenue figured? Well, your revenue is figured how much does it produce, in a month, and what was your price paid, per MCF or per barrel, and what was your net revenue interest on that joint venture. So if we take the middle column here, that's 3,000 MCF, 3,000 times 4 times 1.6 378, you can extrapolate that out. That's roughly $5,800 per month on this example. And again, this is just an example. And that's roughly a 25.59% or 23.59% return, cash on cash, in this example, monthly. Obviously, you may see some zeros here. Oil and gas is not a guarantee. I've heard some people, come close to it, but there's no guarantees in oil and gas. So we always do have a dry hole risk, but that's the reason why you have tax advantages. That's why they afford tax advantages for investments into programs like this. That's why they're not afforded into if you buy, royalties or if you buy a well that's already produced. These are for drilling programs, and this is where you're afforded those tax benefits. But the upside is you're also afforded that income, potential income on that. And remember, 15% of this income that you can receive from an oil and gas or an oil well, gas well, vice versa, 15% of that's tax free, no matter where, even if you live in California, which has got some really high taxes. Cool. We offer these, we package these into a joint venture. It's sold through our exclusive FINRA licensed broker dealer, Texas Securities. I think we covered that. Remember, they've been around a good while, selling exclusively for Crown. We sell it in units. Typically, our average joint venture has between 30 to 50 units. It can be sold in multiple or fractional units. I get this question all the time. Well, if one unit is approximately 300,000, do I have to do one full unit? You do not. We typically have minimum investments of 1/8 to quarter to an eighth of a unit. The unit prices on our joint ventures are typically between 300,000, give or take, depending on where we're at or how many units that we have. That kind of makes a difference, but that's pretty good average, about 300,000. We know that it can provide aggressive tax benefits. 100% of your investment is active deduction from gross income over the life of the well. And your monthly income is based on monthly production. And I always forget to add this. And so your monthly income is based on monthly production and market price. What do you get, for the commodity itself? But what can you expect from us? Well, experience for one thing. We've been doing it for 28 years. In January, will be here before you know it. It'll be 29, celebrating our 29th year. You'll have access to our premium fields in Texas, Oklahoma, Colorado, as well as Montana. We apply new technology in proven areas, and we also work with a licensed broker dealer. And to me, that's really important. There's no bad actors. These guys have all been background checked. They've all have, series license. In fact, TSI has been around for 20 plus years, and we've got guys back here that have been here for 15 years, So they stay. We provide a good product, good support. You'll also have investor support. You'll have in-house experts. You have an investor relation team. You have, obviously a client portal, a web portal you can log in, look at, drilling reports, any kind of updates you may need there. Transparent reporting and regular updates. These are K1s. We issue K1s every year. We have a lot of guys and a lot of farmers, ranchers, and it's really important that they get their K-1s on time. And, for the last 28 years, we've never been late on it, and I take real pride in our accounting department for that. They need those, on time or early, so they can buy their seed and whatnot. Um, we offer transparent reporting, whether it be drilling reports, completion reports, monthly production numbers, etc. And again, there's some financial advantages as well with this type of investment. 100% of it is tax deductible over the life of the well. Remember, up front, your IDC is about 85% of that, and then the balance of the next 5 to 7 years. And I think it's a pretty good potential hedge against inflation as well as an alternative investment. I had a guy the other day say, "Well, how can you say you think it's a good hedge against inflation?" Well, y'all probably remember back in the COVID days, and really, it was my oil portfolio was probably my best performing portfolio during that time. So I do think it's a good potential hedge against inflation. Couple things here. I know that we have a virtual booth, and obviously there's some great information in there, but we're located in Carrollton, Texas. That's just outside of Dallas. I've been in the same building for 20 some odd years. The standalone building that we built in Carrollton, Texas. There's our address up there. You can call us anytime you'd like to speak to somebody. Visit our website. We got a QR code. I also believe this is in the booth as well. If you'd like to book an appointment, when you talk to somebody, no pressure here. Feel free to do that as well as following us on social media. I don't really do that, but we do that here. Up top, the picture up top here, that's our Crown Exploration team. And down below, this is our Texas Security team. And Joe, I think we've come kind of to the end, and
Yes,
I think
sir.
we got a few minutes, maybe take a question or two.
We do have a couple, two quick questions. First off, the price of oil and gas, if it's very volatile, does it affect you guys? Like Trump's talking about $2 gasoline over the next, that's where he wants it to go. So can you kind of touch upon, we're not asking you to price predict here, but thoughts on volatility if oil keeps going lower or vice versa, same for gas?
Well, I think yes, politics and the economy can slow you down or they can speed you up, right? But whatever the environment, we've been through it for 2.5 decades. So yes, but that's kind of our advantage. That's kind of the one thing that's kept us here. I mean, we made it through, net zero oil there for a month a few years ago. Uh, we're able to pivot. We're able to kind of move. I'm not saying that every pivot or every move we've done has been the perfect one, but I mentioned earlier that we're pretty heavy. I'm pretty bullish on natural gas right now, and yeah, I think that market should sustain. Could be wrong. Whereas oil, yeah, I think oil. There's a lot of factors in oil. I wish the U.S. controlled more of that. The pricing on it. But when you're talking about gas, I think you're asking, actually gasoline going down. I think I've heard Trump mention that, $2 gas, et cetera. That really doesn't affect our natural gas. Our natural gas is still utilized by power plants, still being liquefied, still, they're begging for it for these AI data centers they're building, et cetera. So I think that the advantage that we have is, we're not a small company, but we're not a big company. And somewhere in there, lies that reality where we can pivot. We can move away from drilling oil wells and drill natural gas wells or vice versa. So, yeah, I mean, politics can slow you down, but we've been through it all for the last 2.5 decades. But great question.
Good. Yeah. You've been through all the peaks and troughs, as they say, right? So
We
those full cycles.
so some better not.
Yeah,
But yeah.
right. Exactly. We have time for one more. I'm going to read this just as DJ sent it over to us. Janine, thank you.
Okay.
Janine Burns says, thanks for sharing, Shane. Great presentation. But DJ asked this, How do you make sure there is no dry hole? As most of the companies I met had 90% dry holes, and you end up with a tax credit of 25% and lose the rest of the money. Is there a guarantee of oil when you drill?
No, I mean, simple answer is no. It now, um, we've mitigated a lot of the risk by drilling into blanket formations, and the geology is pretty solid. But again, there is no guarantee uh, that it's dry. It, it's it it. But again, we don't go out and try to do wildcats. A lot of what we do is these long laterals, and have had really good success with it. Had very few dry holes, in really the last 10 years. But anything is possible, and that's one reason why you're afforded the tax benefits. A lot of people ask me like, what scares you in the oil business? Is it dry holes? The dry holes don't scare me. I mean, I don't want them. Don't get me wrong, but what scares me more than anything is completing or trying to produce a marginal well. Those will make you pull your hair out, and that's what we want to avoid. Me personally, I would much rather it be dry than complete a well that shouldn't be complete. But I hope that answered your question. But no, there's no guarantees.
Thank you, sir. We're just about out of time, but we do want to say thank you, Shane, for obviously all your support of the events over the years. We appreciate this session. A lot of folks mentioned, or as few, I should say, mentioned it was a great session, and thank you for sharing. Again, thank you, Shane. Thank you, everybody, for joining this
Thank you.
session and, of course, joining the Show sessions in general. We want to wish everybody a good rest of your day. Enjoy the rest of the show today, and everybody have a good rest of your week. Shane, thank you again, sir. You guys have a good week and a good holiday, okay?
Yes, sir. Y'all too. And thank you, Joe. Thank you guys for tuning in today. Hope to hear from you.
Terrific. Thank you again, Shane. Have a great day and enjoy, everybody. Thanks again. Have a good week.
Bye bye.